Welcome to the Whitwam Wealth Real Estate Podcast. Today we'll be discussing investor loans.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam. I'm glad you've joined me today for this episode of Investor Loans with Christian Wohl. And today I've invited Christian with Barrett Financial and Home Sweet Loans to join me again on this podcast. So Christian, welcome back to the Whitwam Wealth Real Estate Podcast.
Thanks, Scott.
So glad that you had time so that we could do another podcast. I got a lot of questions regarding investor loans. And so if somebody didn't see the first podcast, why don't you just give me a little, again, let's just take a minute, 2 minutes, and give me a little bit of background on your experience with doing investor loans.
Sure. These have fast become my favorite loans because they're much easier. And folks that do investor loans know a lot more about lending and seem to be much less anxiety in the space because they've done enough mortgages in the past for their primary homes. Maybe they own a vacation home for themselves. So they've been through the process of document collecting enough times that it's a little bit smoother process. Typically with these, no taxes, right? We're not looking at W-2s
Right.
and whatnot. So it's a much easier process because we're just evaluating the property a lot more.
Right. Well, and that really makes things, I guess as an investor, it really makes things kind of surprisingly easier when you got your stuff together that they can get to you and you can go, oh yeah, we just need this and this. Well, what about this? I bought a house and it was like I, went through an entire, medical examination,
Yes.
just to get through
Yes.
it. But there are a bunch of different type of investor loans that are in the marketplace right now, especially in the single family environment, the single family home environment that are kind of taking kind of a little bit by storm in the investing market. So talk to me a little bit about your no doc type loan. That you were just talking about how you can use. You don't have to have this, and this, but you just need this. So talk a little bit about.
Sure. So some of a couple of the more popular loans that I'm doing most frequently here this year would probably be bank statement loans.
Okay.
And debt service coverage ratio loans. So with bank statement loans, we're more or less just analyzing cash flow for either the last 12 or 24 months. We're looking at money in, money out. And then again, evaluating the property.
Okay.
So it's more or less that simple. With debt service coverage ratio, we're evaluating the property. Usually 20% down, 30% is better. We can go a little lighter sometimes, depending again on the property. But it's the debt service, right, that needs to be covered on the loan.
Right.
At least a break even for the investor to be comfortable with it. On the other side, you as the person that's purchasing the property, you probably want to be cash flowing at least a little bit.
Can you do DSCR refi?
Absolutely.
Okay.
I do them all the time for folks that have a lot of equity and they're using that as their bank.
Okay.
To take cash out, perhaps to renovate a property or renovate a couple of properties or purchase their next property.
Yeah, the only reason I bring it up, I know a lot of investors who will take properties down with hard money, or they'll take them down with seller financing.
Yeah.
And then they'll do some repairs to them. They'll pretty them up, and then they're going to want to put DSCRs. They're putting tenants, into the property.
Yep.
And so then, what do you guys use? Do you guys use a desk underwriting value, or do you actually send an appraiser? How's that work?
Very familiar formula, and doing that right now on a loan in Alabama, and I've done that a number of times this year. So pick it up with an investor that's either usually using a HELOC on another property or hard money to acquire it. There's 60 to 90 day window to rehab it, and then we'll DSCR so that they can take their equity back out. In most cases, we are using a 1007 appraisal. With the 1007, the difference between that and the typical 1004 appraisal is we're getting the rent schedules.
Right.
Right. So with that, it helps us.
Those are a
back
little more
into
costly too to the to the borrower for a 1007.
Correct. About $200 more,
Right.
typically. But with that, we get the RUT schedules, which helps us back into our ratio.
Is there any moratorium on time frame? So, for instance, let's say one of our investors had a home that they have under a current loan right now, right? And they've got, a tenant who's paying rent on it, and that lease comes up, so they're going to have the tenant leave, and then they rehab it and want to get this thing. So that it's been long term. So that's not a problem with DSCR.
No.
Okay, so what about if I take it down with hard money today and get the tenant out, and within 30 days I want to redo it? Is there a moratorium on how long you have to have the property before that they'll allow you to use the value of the property versus the purchase price?
Depends on my lender.
Okay.
I do have lenders that will do that. Yes. There are the ones that will do that. Yes. Let me answer that a little bit more clearer. Yes, I do have lenders that will do that.
Well,
Yes.
let me give you the scenario here. This is actually a real life scenario that happened. So we bought a property with hard money, went in and bought it with hard money. And then immediately I called my lender. Well, we bought it for about 40% less than market value. But our deal is we had to clean the property off. So really the backyard was the biggest issue that the person couldn't deal with.
Okay.
So we got a house. We put a tenant in it right away, and I called the lender and just say, hey, I want to refinance this thing. And then they sent an appraiser out, and they worked it off the appraisal. We hadn't even owned the house 30 days and paid off the hard money, and were able to take it from 12% hard money down to 3%. This was back obviously
Sure.
when rates were a little bit lower with no, but there were times, and this was actually just before I met you. So this would have been back probably 2019, 2020, about time you were getting into the business. But there's a lot of lenders that go, no, you have to hold them for 6 months, you got to hold them for a year. Yeah. And as an investor, I certainly don't want to hold something at 12 or 18% interest for a year.
Right.
So you do have some solutions, though, with some lenders.
I do, yes. Every lender's appetite for what they'll take, because eventually they have to sell these loans, right?
Okay.
And that's the thing I think many folks don't understand, is that they're not holding these loans. They have to be able to sell them as well. So yes, I do have lenders that will take those.
Okay. And on your DSCR side of things, the debt service cover ratio loans, you can do those on the single family, duplexes, triplex, quadplex. You can do those on multifamily, that kind of stuff. Correct?
We love those.
Okay. Yeah, obviously when you've got more tenants. Now, there's a lot of my investment. In fact, is we've had Brian and Gina Kandusky on here, and they were really big into short-term VRBO type stuff, and they've converted them all over to some type of co-living. And in a co-living environment, I don't know how much experience you have in this, because it's really kind of a new thing.
It's a new concept,
to hit the market, where you have a single property with 4 different tenants, but now the properties are cash flowing. Is that something that you guys have got a vehicle for doing DSCR loans on? Have you looked into that? We do. Okay.
We do, yeah. As long as we have signed leases and we can track the cash flow on it, we're fine. Yeah,
and again, we're getting more into promoting that environment because it's spreading across the country, and I think that it's a way that will open up some opportunities. Now, there's another investment vehicle that is more on the traditional side of things, and because we've got a lot of military investors who watch the program, and that's the VA side of things. I love VA just on the conventional side of buying. I mean, if you're a vet and you've got VA benefits and you're renting a home, you really should be talking to Christian just on his conventional side about how you can turn those VA benefits into home ownership. Zero down. I think if you're war zone or injured or something, they even pay they cover the funding fee. There's some things there. I mean, what a way to get in. My son's former military, and when he got out of the military, got him into a home with nothing down, and he was able to buy a home right away. And But there's also on the VA side some investment opportunities. You want to talk about VA and investing opportunities?
Yes. So if the vet has a service-connected disability of at least 15%, it waives their funding fee, which makes
That's
this
huge.
absolutely fantastic. I've had 3 vets reach out to me in the last month that were unaware of that. And just after a short conversation, hearing the elation in their voice fuels me through, on the other end of the phone line.
But now also, correct me if I'm wrong here, VA will allow the vet to roll that funding fee in if they don't qualify as
Correct.
injured into the loan, so it
Also,
doesn't have to be
yes.
out of their pocket. So,
Right.
Obviously it's great if VA is covering it, but if it can't, VA will allow them to roll it into the loan so they don't have to come out of pocket with that.
Yes, it just did that for another transaction here in Mesa this last month for a family that moved here from Florida. So yeah, absolutely, either way. But for young folks or anybody that has these benefits that's thinking about buying their first home, if they have the appetite for this, duplex, triplex, quadplex is an absolutely fantastic way to go for a first purchase. Why? Because you have 2, 3, or 4 other doors, or 4 doors total. If you live in one, you can rent the others and essentially have your mortgage paid for.
Yeah, I had a friend before we moved here up in the Pacific Northwest, and that's how he got started in real estate investing.
Mm-hmm.
He did it with a quadplex. He and his wife moved into the one unit, and they had to live there. They had to assure that they were going to live there at least a year.
Right.
Rented the other 3 parts out, and then the property appreciated. They lived there for actually several years, but the property appreciated, but they moved out, and the rents now that the units were producing were able to get them into another home that he could use the remainder of his VA benefits.
Right.
Because you don't lose your VA benefits when you
not.
buy a home. That's what's really neat about this. So if you've bought a home using your VA benefits, let's say you bought the home 10 years ago, and maybe you paid $150,000 for it, you only used $150,000 of your total benefit. You may still have a good portion of remaining benefit that you can help them figure out what that is, and they can use it on, whatever their next move in life is.
You can use more entitlement to purchase another home in the future. Absolutely, it's something to be reviewed with the individual.
Right.
But absolutely, yeah, we do it all the time.
Yeah, and so VA for our military investors, it's something I think that you should explore. Not that I'm saying that it's the answer to being investing, but I'm big into no money down real estate investing. And if you can find ways to legally, okay, people come up with me with all kinds of scams that would be mortgage fraud. I'm not into that. But VA gives a vehicle where you can do it with basically no money out of pocket and get started. And you should be taking advantage of your VA benefits.
Yeah, that's why you served.
Yeah, and again, so let's just say that you're new to this. Somebody who's just come through our maybe a beginner course as in a beginning coaching program in our company or something, and they're a little bit timid obviously about doing that. You have the ability to explain the whole process and steps with them. So if a new person walked in and said, hey, look, we own a home, but we want to buy a rental house, or maybe we want to buy a house and we're going to take some time, remodel it, and maybe flip it in the future when the real estate market gets better, or those kind of things. They can come to you and talk about what options they have, right?
Yes. And these are conversations that I love because I consider all of this under the umbrella of life planning. Nothing great in life happens without a plan, right? You didn't get your degree without a plan. You didn't get married without a plan. You may have a kid without a plan, but nothing else great in life happens without a plan. So if you are thinking about getting a house, you probably talk some of this through, right, with your significant other. Was it on the beach? Is it in the mountains? Is it out in the desert? Where is it? Great. Once we establish a timeline to it and a budget, now things start, falling into shape, and we can make those things happen.
That's awesome. Okay, I asked you last time I had you here on the podcast. I asked you the same question, but I want to frame it now from a real estate investor standpoint.
All right.
So, what are some common misconceptions in the field when it comes to investor borrowing that you run into when people come into your office?
Oh, that you have to be rich. Yeah, that only the rich can invest. You don't have to. You can tap into the equity from your
Right.
home. There's a number of different places you can get help with this. And wow, when I explain debt service coverage ratio to folks, and I have to usually go through it about 3 times because conceptually it's new.
Right.
That when we are evaluating the property, right, and that it's going to cash flow. That's man, it's such a wonderful program that if you want to acquire another property, that you're probably going to vacation there maybe a few times a year. Take your significant other, your family, or what have you. But you want that to be able to, to build wealth for you. You should. And I think once folks go through the numbers a couple of times and realize, I don't have to have this filled every single day to be able to make money
Right.
on it. It's a fantastic program.
What are some of the lessons that you've learned along the way in helping, real estate investors?
Education, staying up on new programs as they come out, and just finding solutions for people, providing solutions. With every scenario, there is always a solution, and what I think may be the solution may not be the solution that you are comfortable
Right.
with. So let me give you 2 or 3 that may work. The more I understand about your life and what your goals are, the more potential solutions I can offer. I don't tell anybody what to do, Scott. I never do. But if I can give you potential solutions or options and you can tell me which one is most comfortable for you, then we're probably going to be able to move forward and you're going to be happy.
I've learned that as a real estate coach.
Yeah.
People want to come into a coaching program so I can tell them what to do so that they can be successful like I've been successful investing in real estate. The problem is if I tell you what to do, I can share with you what I've done, what other people have done, what makes sense to do. But if I tell you what to do and it doesn't work, who are you going to blame? You're going to blame me. But let's face it, we all got to take responsibility. I don't care what we do in life. There's always going to be some risk. But you got to look at what the rewards are. I think about all of the times that my wife and I made the decisions to be involved in investing and the benefits that have come out of real estate, investing. The checks that are, we've received over the years as part-time real estate investors because we were traveling in the missions field and doing ministry stuff. But part-time investment check, sometimes $90,000. I mean, that's more money than most people make in a year. It's incredible when you get these kind of checks in. But there's a little bit of risk with it. I think the biggest risk for real estate investors is that they don't hire a good coach and they don't have good advisors. So they don't come to you and talk to you first about what their options are in investing. They just decide, hey, I watched a TV show, I watched a YouTube video, and I'm going to go do this. But Christian's sitting here with all the
and that
experience.
doesn't right and that doesn't. They haven't shared all the nuances to their life, and I want to hear them.
Right.
What's going on in the next 3 to 5 years in their life, because that will make a difference in some of the lending options that I'll share with them. And I treat this as a consultancy, you know that, and,
Right.
and we've talked about that. So I'm not going to tell you what to do. I'll give you my recommendation on what I think is the best product for you and why. And ultimately, you'll tell me which direction you want to go.
Right. Yeah, and I don't share a lot about the numbers normally on this show, but we've had some guests in here that have shared some of the numbers, the money that they've made from using the programs that we teach and being able to do what you're talking about doing. And so, even if you've never invested in real estate, I think it's something that you should explore. You need to talk, give a call to Christian. In fact, how can they get hold of you? We're almost out of time here, but how can people get hold of you? I know Eric will put it on the screen, but
Yeah, absolutely. So my website is sweetloans.net. Sweet Loans. Kids actually came up with that. They thought of Home Sweet Home, and they said Home Sweet Loans. I said, you know what, that's cute.
It is cute.
And Christian Knows Mortgages is my Instagram. You can find me there.
Awesome. Well, we've come to the end of this week's Whitwam Wealth Real Estate Podcast. I want to thank you for taking the time to join me on the podcast today. Be sure to subscribe, be part of our growing community, and leave us a review. We'd love to have your questions. We love responding and answering those. Remember, you can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcast, and YouTube, or even if you enjoy listening to podcasts on other vendors, we are everywhere. This is Scott Whitwam. Be sure to join me on the next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.